Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Monday, August 13th, 2012. Well, a continuation of the trend to the upside today. Today's candle had a lower high but a higher low and continues the prior first time frame uptrend that was in place. A small black body candle, and the black body denotes the sellers making net bearish progress, and that's in contrast to the previous week and a half or so where we had a series of white body candles. So some slight change in momentum for this market between the open and the close. Prior to that, we had the buyers making upside momentum for each day. As we got to the trading up above the round number 1400, they were making only very small amounts of upside momentum on the between the open and the close. Very small amounts of net bullish progress. Today, net bearish progress. So it does suggest that there is potential for a change of trend. Not a very strong suggestion, because we've actually seen the sellers lose commitment once again down around the 1400 round number level. So an area that was prior resistance is now acting as support. This area just below 1400 has been tested on 4 of the last 4 trading days. So very, very significant if there is going to be a change of trend. Now, one reason why there is potential for a change of trend is the Kijun-sen pointing flat. And very, very often when that points flat, price action is attracted back towards there. But I think this says something about the strength of this market. That the fact that the Kijun-sen is flat and the sellers are having a lot of trouble committing to any downtrend in this market suggests that the buyers are really quite strong in this market, and there is potential for continuation of this trend to the upside. We do have this high now roughly around the 1407, 1408 area that is important, and we have resistance up around this swing high around 1415, but very, very solid support at 1400. Now, in terms of the style of this candle, it is a hanging man type pattern. We have a prior uptrend in place here, and with all patterns we need a prior uptrend. And if we look at the trading that we've had above this 1400 level, we've had 2 spinning top type candles, a small white bodied candle with a large shadow on the bottom, and then another small bodied candle, this time with a black body with a large shadow on the bottom. And both of these last final candles here are hanging man type patterns, and that does suggest that there is potential for a change of trend. The reason why they are potential reversal patterns is because of the size of the body, because they're very small bodies. The only problem with them is that you have this shadow on the bottom representing the upside price rejection from 1400, the sellers losing commitment. So not as strong a signal here, and we do require confirmation of the change of trend, and that would be a lower high and a lower low. And what I'd like to see is a bearish close down below 1400 if we are going to see this market retrace back down through this first time frame uptrend that the market's been in for the past week or two. Now, in terms of the Fibonacci extension, we're examining the relationship of the current first time frame uptrend the market's in to the prior time the market was trending up, and here we see the market really not going on with the move above 78.6. We did have a test above there and rejection on the 3 days here, and then a close above with the buyers in control. So the previous day's trading did suggest that there was potential for the market to trade higher, but today we've seen rejection from that area once again. 78.6 is not a very strong level, so the fact that we're seeing buying coming in around here does suggest that it may not hold. There is potential for the market to continue trending up, and the 100% level is probably quite important to this market, and that's at 1417. If the market does continue rallying, let's watch how the market reacts to that 1417 level. Now, in terms of the Fibonacci retracement of the prior downtrend, and now we're in an expansion phase of that, we don't have any levels here near where the market's trading at the moment, but the 161.8% level is at 1414, coinciding roughly with that 1417 level, the 100% level on the other Fibonacci relationships that we've just discussed, and that does suggest that that will be a very important level for this market if the trend does continue up. And of course, those levels coincide roughly with this swing high around 14.15, 14.16, so very, very important resistance up around there. But in terms of Ichimoku, a bullish market in all three time frames. Bullish in the long term by trading above the cloud, medium term by trading above the Kijun and the pink line, and bullish in the fast term time frame by trading above the Tenkan, the green line. The Chica span is above the corresponding price action, so it's confirming bullishness that we're seeing. So overall, a bullish market, a market that's attempting to retrace this strong uptrend that we were in for the prior couple of weeks. Some indecisive trading up above the 1400 round number level, but 1400 is now holding a support, so 1400 is crucial to this market over the next few days, but certainly the highs around where the market's trading at the moment is just as important. If we do see a bullish breakout above there, then strong resistance up around the 1414 to 1417 level.